Hi, this is Kerry Artak with Wicked Stocks, and I'm bringing you an update on the U.S. dollar index. Interesting developments here. We have, if you've been following my analysis, I do periodic U.S. dollar index analysis. I did post a video on the U.S. dollar index about a month ago when we were up near that 105.35 high area. 105.35 is the high of the low. I use that as an upward pivot point, especially on the longer term charts, the weekly charts. This is a monthly chart, by the way, and this is the index itself. This is not the U.S. dollar index futures. This is the index itself. So these numbers, the 105.35 will not change. It is the index itself. So this is a rising 1/3 speed line, long-term speed line. And I can you can see the crosshairs here. That is actually representative, that vertical line of the 1/3 pullback where the crosshairs are. In other words, the 2008 low against the 22 high, 33.3% back down. And you basically create a trend line that is projected off that low. The rising 1/3 speed line is a trend line that you create from the 2008 low, and it intersects with the 33.3% pullback point in the time frame in which the high was made. And that high was, from last September. So we are in the midst of an intra-week violation of that 101.28 long-term speed line. This is a monthly chart, so even a weekly settlement below 101.28, and that needs to really be by a 1% margin. So if we settle Friday at 100.27 or lower, or any week this month of April at 100.27 or lower, we have a valid longer-term sell signal. Now, we came off of the long-term channel top that I can show you here. Now at 114.34, we tested that quite a bit September and October, you can see here, and we came off of it. And when we came off of it, we fell to the rising 1/3 speed line that I can show again here and here, actually, where you can see the intersection. So that 1/3 speed line held beautifully back in February, and we rallied back to 105.35 off of that speed line. Now we've fallen back to the speed line. It held for a good part for all of last week, and now we are breaking it. And assuming, once again, that we close this week below 101.28 by the 1% margin, 100.27 or lower, any weekly settlement in April would then indicate bearish continuation to 93.10 and rising. That 93.10 channel bottom, rising 16 a week. Once again, it was the channel top that held the highs. And with channel dynamics, and I see this all the time, once you test the channel top, you need to respect the market's ability to fall all the way back to the channel bottom, which once again, at this point in time is 93.10, rising 16 cents a week. You can monitor the location of these line studies through time if you like. You just add 17 cents to 101.28. That'll be 101.45 for the entire month of May, so forth and so on. And the 93.10 channel bottom is rising 16 cents a week. So in May, it'll be 93.26, so forth and so on. Now, how long will this take? This could be this move from the September high to that recent, that February low. That was 1, 2, 3, 4, 5, roughly 6 months. 6 months from now, by the end of the year, 93.10. That could be sooner, but I think realistically, let's just call it 5 to 8 months. That allows the market to get locked into a consolidated framework on the way down, which is very typical. It could be 3 to 5 months, could be 5 to 8 months. I'd say by the end of the year, realistic, 93.10. With respect to the stock market, you can see there's an inverse, well, I don't have that chart up right now, but there is a rough inverse correlation right now with the U.S. dollar. So as the dollar continues to weaken, the U.S. stock market becomes more appealing. That is not a correlation that I'm expecting to hold steady, but it is the rough correlation. The September-October high area in the U.S. dollar index, this channel top, was correlated with the lows that were put out in October in the NASDAQ, in the S&P 500. So if we close below this speed line this week, once again, 100.27 or lower on Friday, that is a sell signal that should play out in the later year, and I would expect continued weakness down to 93.10. Now, I see a lot of fear mongers on YouTube, on the internet, talking about the decimation of the U.S. dollar and how it's going to be. I don't even want to go there. What I see is that this is still a strong index. This is still a strong entity. The U.S. dollar finds significant support at 93.10. This well-defined channel structure at 93.10, if tested later in the year, can contain selling not only through 24, but possibly into later decade, because I'll remind you that this formation itself is about 15 years in the making. So this could be a multi-year low at 93.10 and rising. Just to let you know, good bottom picking territory for the US dollar in the lower 90s, 93.10 and rising. And once again, the last thing I will say is if we close any week the month of April below 101.28 by a 1% margin, this entire month 100.27, 1% violation, we are in sell signal mode through the rest of the year. And this number will change. April, this 101.28 once again rises to 101.45, and then it's a 1% violation of 101.45 at the end of any week. And, I'm just going to leave it at that. If we don't close, I guess there's one more thing to say, that if we don't close below this rising 1/3 speed line by the required 1% margin, we can close below it by a hair. It is still technically a hold, if you will. If we start trading back above it without the violation, just know that in the months ahead, we can rally back to not only 105.35, but even 107.68 perhaps over the next 3 to 5 months. That is the low of the high. That is a significant high. And this will be meaningful resistance that, if tested, could contain buying at least on a monthly basis. But long term, holding below this rising 1/3 speed line without the valid required settlement below it, holding above it, will allow, once again, a return over the next, I'm going to say over the next year or so, back to the 114 handle long-term resistance, where we can top out on an annual basis or longer. I'll leave you with this image. This is the big picture, and we are in the midst, perhaps, of a longer term, well, let's just call it a secondary sell signal. The first really, or the sell opportunity, was back in September when we were testing this channel top. As you recall, I had the video out prior to the testing of this area a few months earlier, and this was a solid zone of long-term resistance. We fell to the 1/3 speed line. The secondary sign of weakness now, if we close below 101.28 any week, the month of April, 100.27 or lower. And that's all I've got for this particular analysis on the US dollar index.